Welcome to ForexTV.com. Today is Wednesday, January 28th. I'm Kathleen Reddington with your New York Forex Market Buzz. The U.S. dollar falls to the euro. And now for a look at the latest headlines from the CEP News Desk. U.S. crude oil inventories jumped far more than expected for the second straight week, but crude oil futures rose after the EIA weekly supply report showed an unexpected decline in gasoline inventories. Supplies of gasoline fell 121,000 barrels to 219.9 million barrels in the week ended January 23rd. Gasoline inventories were forecast to climb 2 million barrels. President Barack Obama's latest stimulus package could include the creation of a bad bank, an institution that would purchase and hold the illiquid or toxic assets that continue to hurt balance sheets of many financial institutions. Details of the project have yet to be released. According to a report from the International Monetary Fund, on the back of a $2.2 trillion loss on toxic U.S. assets worldwide, the global economy is expected to contract in 2009 before recovering the following year. Today we are joined by Jim Hyerczyk of Brewer Investment Group. Hi Jim, how are you today?
Okay, Kathy, how are you?
I'm doing well. All right, so we're seeing a lot of different moves today because of this bad bank idea that the Obama administration has proposed. I want to know what you think this bad bank will entail, and do you think it will be helpful in the solution of the economy?
First of all, I think it's a great idea. It's one of the first things the Swiss National Bank did back in September or October, when they realized that their banks had a bad and toxic debt on the book. So I think it's a great idea. It's going to entail this, as you stated, taking the bad debt or the uncollectible debts out of the banking system and off their balance sheets and into a bank that will be allowed to hold these instruments to maturity to see if there's anything that can be collected. It's probably going to be very similar to what the U.S. did several years ago during the savings and loan crisis, when they were able to move bad debt into a so-called toxic bank. So I think it's a great idea for the banking system and for the country as a whole.
All right, and the dollar and the yen are falling partly because of this bad bank plan, causing the yen to fall to the Aussie. I want to know what your strategy is for Aussie yen.
I think that you have to look at the short side of the yen. It's getting pressure from two areas. First of all, if we can get a return of appetite for risk, then traders will once again sell the yen and look for better yields in higher yielding assets. On the other hand, the way the market's been trading, the yen's been trading the last couple of weeks, it looked as if the markets were fearful of some sort of Bank of Japan intervention, and I know that the Bank of Japan is on record saying they don't want excessive volatility, and they're very concerned about the rise in the yen. And I think that the activity the past couple of weeks indicates that traders are hesitant to buy at high levels, and they're also hesitant to create excessive volatility. And the Bank of Japan is on getting marching orders from the government to do something about the rise to help the exports, which in turn will help the Japanese corporations. So it's kind of getting a double whammy. Both trader appetite for risk and the threat of an intervention should put pressure on the yen.
All right, is it a similar story for the euro-dollar pair?
With the euro, we're looking at a different situation in the euro. Number one, if the dollar weakens on the stimulus plans and on the toxic asset plan, we're going to see the euro rise. The second thing affecting the euro is the possibility that the European Central Bank will refrain from slashing interest rates at its next meeting on February 5th. These two factors are providing support for the euro, and they could trigger a short-term rally.
All right, and the pound is up for the third straight day. Do you think that sterling finally hit its bottom and is now back on the way up?
I don't think the sterling officially made its bottom yet, but what you're looking at is the massive amount of shorts that have been built in the market in anticipation of nationalization, as we saw last week. I think that the fact that Barclays showed good earnings and good results, and they didn't have to tap the government fund as bailout money, is positive, and it's causing the shorts to rethink their positions and move their money elsewhere. But it hasn't given me an outright buy signal yet. There's still too many issues there regarding the recession and also a fragile banking system and really a non-existent real estate market. So it's going to take several weeks or perhaps months to build a support base that could support a rally. Otherwise, if it goes up too fast, it'll just come down as hard. So it's very important that you get several tests of the recent bottoms, or at least a base built, before looking at long-term, the long side for the long term.
All right, Jim, thanks so much for joining us today.
Thank you, Kathy.
This has been your New York Forex Market Buzz with Jim Hyerczyk of Brewer Investment Group. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange right here on ForexTV.com.